Welcome to Earnings Recap. Today, we're covering Meta's earnings report, January-March 2025. If you enjoy this kind of content, please like the video and subscribe to the channel. All right, let's dive into this. We're here to take Meta's first quarter 2025 earnings report and really break down what it all means for you in plain English.
Exactly.
Think of this as your shortcut to understanding the key financial story here.
Yeah, precisely. In just a few minutes, you'll get the crucial numbers, revenue, the bottom line profit, how much they've grown, and also what they're expecting down the road.
Right.
We know these earnings reports can seem, pretty dense sometimes.
Mm-hmm.
So our goal is to pull out the most important pieces without getting you bogged down in all the technical jargon.
Perfect. So let's jump right into the big picture for Q1 2025. We'll start with the top line revenue. How much money did Meta actually bring in?
Okay, so that figure was $42.31 billion.
Wow, $42.31 billion. That's quite a number.
It is, yeah.
Yeah.
And to give that some context, it represents a 16% increase compared to the same quarter last year.
16% growth?
Okay, and here's a little extra detail if you look at it on a constant currency basis, basically ignoring the swings in exchange rates. The revenue would actually have been up 19%, so underlying growth was even a bit stronger.
Okay, that 19% constant currency figure, that really shows the core business momentum then. Useful context. So, revenue's strong. What about the costs involved in generating that?
Sure. So total costs and expenses came in at $24.76 billion, and that's an increase of 9% compared to last year. So costs went up, but not as fast as revenue.
Right, revenue grew faster than costs. That usually means good things for profit margins, doesn't it? What was the income from operations?
Exactly. Their income from operations was $17.55 billion.
Okay.
And that's a significant jump, 27% higher than Q1 of 2024.
27%, nice.
Yeah, and you mentioned margins. Their operating margin actually improved. It was 41% this quarter compared to 38% in the same quarter last year. Shows better efficiency.
41% operating margin. That's definitely moving in the right direction.
Okay, what about taxes? Sometimes that can have a big impact.
It can. Their provision for income taxes was $1.74 billion. Interestingly, that's actually a 4% decrease compared to last year.
Oh, a decrease. Why is that?
Well, it led to a lower effective tax rate this quarter. It came in at 9%, whereas last year in Q1 it was 13%. So a more favorable tax situation this time around.
9% effective tax rate.
Yeah.
That helps the bottom line too.
Yeah.
So after costs, operations, taxes, what was the final net income, the actual profit?
The final number, net income, landed at $16.64 billion.
$16.64 billion.
And like we were hinting at, that's a really substantial leap, 35% higher than the net income from Q1 2024.
35% profit growth. That's very strong. And for investors tracking the stock, the earnings per share, or EPS, is key. How did that look?
Diluted EPS, yeah. It came in at $6.43 per share.
$6.43.
Which is, again, a really significant increase. That's up 37% from the $4.71 they reported a year ago. Wow. 37% growth in EPS. Okay, so the headline financials revenue, income, EPS, all showing really robust year-over-year growth.
Absolutely. Strong performance across the board financially.
Now let's shift gears a bit. What about the operational side? Like user numbers, are people still flocking to their apps?
Good question. Yeah, they reported on their family daily active people, or DAP. That averaged 3.43 billion people for March 2025.
3 billion daily users.
Billion, yeah. And that number is up 6% compared to March last year. So the user base is still expanding.
6% growth on that massive base is still pretty impressive. And that user base fuels the advertising business, right? How did ad performance look?
It did well. Ad impressions delivered across their family of apps increased by 5% year over year.
Okay, so more ads shown.
But importantly, the average price per ad also went up. It increased by 10% year over year.
So they're getting more money for each ad and showing slightly more ads. That combination really drives the revenue growth we saw earlier.
Exactly. Both volume and price contributing positively.
Makes sense. Now, we often hear about big tech spending. What about Meta's capital expenditures? How much are they investing back into the business?
They spend quite a bit. Capital expenditures, or CapEx, were $13.69 billion in the first quarter alone.
$13.7 billion in just 3 months. That's significant investment. Where's that going? We'll probably touch on that more with the outlook, I guess.
We will, yeah. A lot of it relates to infrastructure, especially for AI these days.
Right. And besides investing back into the business, how are they returning value to shareholders? Any share buybacks or dividends?
Yes. both. They repurchased $13.40 billion worth of their Class A common stock during the quarter.
Okay, big buyback.
And they also paid out $1.33 billion in dividends and dividend equivalents, so returning capital through both channels.
Good for investors to know. And what about their overall financial health, their cash position?
Looking very solid. As of the end of March 2025, they had cash equivalents, and marketable securities totaling $70.23 billion.
$70 billion in cash and easily accessible funds. That's a huge cushion.
Definitely provides flexibility. And their operations are generating a lot of cash, too. Cash flow from operating activities was $24.03 billion for the quarter.
$24 billion from operations.
And from that, their free cash flow, which is basically the cash left over after capital expenditures, a key metric many watch, was $10.33 billion.
$10 billion in free cash for the quarter. Strong financial footing then. One last operational point, headcount. Are they still hiring rapidly?
They reported headcount at 76,834 people as of March 31st.
Okay.
And that's actually an 11% increase year over year. So, yes, they are still growing their workforce.
Interesting. Growing headcount by 11% while also improving margins. Okay, let's look forward now. What did the CFO say about the outlook, starting with the next quarter, Q2?
Right, the guidance. For the second quarter of 2025, they expect revenue to be somewhere in the range of $42.5 billion to $45.5 billion.
$42.5 to $45.5 billion. That midpoint suggests continued growth compared to Q1's $42.3 billion.
It does. And they also mentioned they expect about a 1% tailwind from foreign currency fluctuations to help that year-over-year growth rate for Q2.
Okay. What about spending for the whole year? You mentioned earlier they adjusted some things.
Yes. For the full year 2025, they've actually lowered their expected range for total expenses slightly. It's now projected to be between $113 billion and $118 billion. That's down from their prior forecast.
Trimming expenses a bit. But what about the CapEx, the investment spending?
That's where they increased the outlook. The expected range for capital expenditures for the full year is now $64 billion to $72 billion.
$64 to $72 billion. That's a significant jump from the Q1 run rate. And you said it was up from their previous guidance, too.
That's right. The prior outlook was $60 to $65 billion. Yeah. So a noticeable increase.
And the reason?
Primarily driven by needing more data center investments to support all their artificial intelligence efforts. They also cited an increase in the expected cost of the actual infrastructure hardware itself.
So AI is really demanding significant capital investment.
Very much so. Though they did reiterate that the majority of this CapEx in 2025 is still going towards the core business, not just AI or reality labs.
Got it. What about the full-year tax rate outlook?
They expect it to be in the range of 12% to 15%, assuming no major changes to tax laws, of course.
12 to 15%. Okay. Seems relatively stable compared to recent history, maybe slightly up from Q1's low rate.
Yeah, Q1 was particularly low at 9%. This 12-15% range is more in line with what might be expected longer term, barring legislative changes.
Now, one area that always seems to loom over Meta is regulation. Did they mention anything about that in the outlook?
They did. They highlighted the, let's say, active regulatory landscape, specifically mentioning ongoing legal and regulatory headwinds, particularly in the EU and the US, that could, significantly impact the business.
Any specifics mentioned?
Yes, they called out the European Commission's decision regarding their subscription for no ads model. The EC found it doesn't comply with the Digital Markets Act, the DMA.
Ah, the DMA. Yeah. Right. So what does that mean practically?
Well, Meta expects they'll need to make modifications to that subscription model in Europe. They warned this could result in a, quote, materially worse user experience for Europeans and potentially have a significant negative impact on their European business and revenue, possibly starting as early as Q3 2025.
Oof. That sounds like a potentially serious headwind coming later this year. Are they fighting it?
They said they plan to appeal the EC's decision, but they also noted that these modifications might be imposed before or even during the appeal process. So it's a definite area of uncertainty and risk.
Okay, definitely something to keep an eye on, the regulatory situation in Europe. Now, before we wrap up, let's quickly touch on the segment results. They break things down, right?
They do. Into two main segments, Family of Apps, or FOA, which is, Facebook, Instagram, WhatsApp, Messenger.
The core stuff.
Right. And Reality Labs, or RL, which is their metaverse and VRR division.
So how did Family of Apps perform in Q1?
FOA revenue was $41.90 billion. The vast majority of that, $41.39 billion, was from advertising. Other revenue was about $510 million.
And how does that compare to last year?
A year ago, in Q1 2024, FOA revenue was $36.02 billion. So strong growth there.
And the profitability of FOA?
Income from operations for FOA was $21.77 billion this quarter. That's up nicely from $17.66 billion in Q1 last year. So the core business is very profitable and growing.
Okay, no surprise there. What about Reality Labs, the metaverse bet? How did that segment do?
Reality Labs revenue was $412 million in Q1.
$412 million. How's that compare?
Actually, it's down slightly from $440 million in Q1 last year.
Revenue down. And what about the bottom line for RL? Still losing money?
Oh, yes. The loss from operations for Reality Labs was $4.21 billion this quarter.
$4.2 billion loss in one quarter.
Yep. And that loss widened a bit compared to the $3.85 billion loss in Q1 of 2024. So they are still pouring significant resources into this area, and the losses continue to mount for now.
Wow. So FOA generating massive profits, Reality Labs generating significant losses. A tale of two segments, really. Did they mention any non-GAAP measures we should be aware of?
Just briefly. They mentioned using measures like revenue excluding the foreign exchange effect, which we talked about earlier.
Right, the constant currency view.
And free cash flow, which we also covered.
Yeah.
They just state the usual rationale that these provide supplemental information and help compare performance across different periods. Standard practice, really.
Okay, makes sense. So let's try to summarize the key takeaways from this quarter. What stands out most to you?
Well, clearly the core advertising business powered by the family of apps is performing exceptionally well. Strong revenue growth, strong profit growth, improving margins.
The engine is firing on all cylinders.
Definitely. User engagement is also still growing, which is fundamental. But then you have these massive investments, particularly in AI and the related infrastructure, signaled by that big jump in the CapEx forecast.
A big bet on the future there.
Exactly. And alongside that, you have the continued significant operating losses from Reality Labs. And of course, looming regulatory challenges, especially that DMA issue in Europe, which could cause problems later this year.
Right. So a very strong present, big investments for the future, but also some clear risks on the horizon. It really paints a complex picture.
It does. It's rarely simple with companies of this scale.
Okay, so to leave our listeners with something to think about. Considering this really strong performance in the core ad business, which is funding these huge investments in AI and Reality Labs, what are the potential long-term trade-offs here? How does Meta balance maximizing today's profits with building potentially uncertain future platforms, all while navigating these growing regulatory hurdles, particularly in Europe? What's the right balance?
That's the billion-dollar question, isn't it? Or maybe $1 trillion in Meta's case. How they navigate those competing priorities and risks will really shape their trajectory over the next few years. Something for everyone to mull over.
Absolutely. Well, that wraps up our deep dive into Meta's Q1 2025 earnings. Thanks for breaking it down.
My pleasure. Always interesting to unpack these numbers.
And thank you all for joining us on Earnings Recap. We'll catch you next time.